So, a question that you may have in terms of considering the revenue-based funding is, first of all, how do you repay that? Also, too, when you're thinking about repaying, well, what is the interest rate or how does that work? Well, one of the things that's really important to understand is that revenue-based funding is a little different in the terms that interest rates in terms of repayment aren't really what's considered. What's really considered is what's called a factor rate, just essentially a cost of you getting the funding. And that cost could typically be between 1.18 to 1.55 times the amount that you get funded. So, for example, let's say that you got funded $30,000 for your business. You could end up paying anywhere between 3,000, I'm sorry, 3,500, $35,400 in total. So that's $5,400 extra, or up to $46,000 uh, on that 300,000, $30,000 loan. So that would be, of course, $16,000 that you'd be paying. It really does depend on factors about your business health, that credit score, your revenue, things of that nature. NFSFs, things that you have right there. Your revenue flow monthly, is it consistent? Those type of situations, right? So this is why it's very important to understand that it's a little different in the sense that it's not that interest rate. It's a factor or cost, which could be, adding another 5,000 to even up to $16,000 to the amount that you already owe. It does depend on that. Okay. This is why when we talk about how it works and what it's designed to do, if you have an idea that you need to implement quickly, that you need the money for, and you know that that money that you're going to use, that you need and you will receive, will help your business grow. Number one, will it be able to pay off the loan that I get? So you get 30,000. Are you going to make enough of that 30,000 to pay, say, that 35,400 that you get? Are you going to make enough to pay that? Number one. But then also too is you're going to be able to get revenue to exceed that. That's what we call good debt. If you can say yes to those questions, then what you're doing in the advance that we offer works the best. Again, this is not money that you get designed to just sit in your bank account and say, hey, we got this money if we need it. No, it's designed for those who need action, who need financing or funding, that is, to take action. Now, a lot of times when we discuss the process of the repaying. No, I'm sorry. Important thing in terms of repaying. Typically, also with that, you have on traditional ones, you have say a 30 day period, or once a month you pay a bill. With the revenue-based funding, what you typically have is going to be a weekly payment that will be automatically deducted from the business checking account, or even daily payments as well. It does depend upon the business owner and the strength of their application. Now, the terms of the loans, this could be between you're repaying over between 6 months, you can pay off early, even go up to 24 months. It does depend as well. And one of the things I want to stress is the offers we do provide. So these rates, the cost of that are going to be the best that we offer in the industry. And I know a lot of people say that, but our underwriters that we work with really provide the best, and they work to get the best deals for those who need the funding. It's up to you to accept the offer. So typically, it's not going to be an interest rate. It's going to be a cost. It could be $5,000 extra of what you do, up to 16. It really does depend upon business factors. Know in mind that the offers that's going to be presented to you is going to be the best ones that are found, and the terms again are going to be the best, designed to be the best ones in favor of you, our customer.